Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Checking in on the tech sector, and it becomes more and more important to watch every day, pretty much no matter what you are playing, in my opinion. And when we saw the S&P 500 weakness today, I said in the chat room that pretty much if I were bearish on SPY, I would be staring at the 5-minute time frame for XLK, looking for a new low of the day, and we saw the new low of the day hit after forming a triple bottom at the low of the day, and an all-out dump followed, and the S&P 500 saw a big-time dump with it. The bulls did buy that dip off of key daily middle Bollinger Band support of 53.01, so that is a new support level to be watching, and so is the low of 52.94 today. So we do have a lower high on the daily to be watching of 53.48, 53.49, a little bit of a double top at that level. But if the bulls keep buying this dip, they're going to remain in control. It would require a loss of middle Bollinger Band to be red flag number 1, and then a break of the recent low of 52.33 to be red flag number 2. So the bulls buying the dip with a nice long lower wick, remaining in control, keeping this weekly chart favoring the bulls, holding exponential moving average supports. It would be a loss of these exponential moving average supports that would be a red flag, as they have held for over 4 months, but doing a good job of holding them so far. Apple bulls are still looking for a potential bull flag, bulls buying the dip. Dojis of indecision the past 2 days, but that does favor the bulls on this healthy consolidation. And we're holding the exponential moving average supports, which makes the likelihood of a bull flag more likely as long as those levels do hold. So if we do get continuation to the all-time high and our double top at 144.50, we're going to see a bullish MACD cross go along with it, giving some nice power to the upside. So the bulls are liking this consolidation. Still no day trading opportunity in terms of the very tight ranges that we're seeing. There is, you could force it, but there's plenty of other names that have a lot more volatility day to day than we're currently seeing on Apple. So normal healthy consolidation. Bulls need a break of the lower high pattern on the daily. 144.12 would do it tomorrow. Weekly time frame, little doji of indecision. Obviously, this is going to change with 4 more trading days left to go. And the bulls remaining in control on the weekly time frame as long as the 4-period exponential is support, which has held for the last 4 months as well. That is in the low 142s. Facebook bulls bought the dip in a big way. The pullback was a lot more magnified than the Apple pullback, but we continued to hold these exponential supports and closed up near the high of the day. Buying the dip very significantly. Our low of 140.82 is a new support. We're on the verge of this MACD going back to bullish, and it is a bull flag of consolidation here as well. Bulls need to break 142.47, 142.63 to be looking right back up at that all-time high, and we're still in control. Same story, exponential moving average support holding the last 3 months, and losing that 4-period exponential support would be a red flag in the short term, but there is no risk of that level being lost as the low of today just bounced right off of it. So we'll keep an eye on these weekly exponential supports, on the daily potential bull flags, and the tech sector buying the dip remaining strong. Thanks for watching. We'll check back in tomorrow.